All right. Well, first, thank you everybody for joining us today for this exciting panel. One of the things that we hear most often from founders is really how hard it is to know what to do around go-to-market. Most of the founders that we back are typically technologists first, and they're learning how to take products to market. And they have really important questions. How do you find your first customers? How do you get an organization to transact? At what point do you start to hire your first salespeople? And these questions are really common and really hard. And so, one of the things that we wanted to do today was bring together some of the go-to-market leaders that we love and respect most, and have a conversation about these questions that everybody runs into when they first start their company and first go to market. For those of you who don't already know me, I'm Alex Salazar. I'm a partner here at Neotribe Ventures. And prior to joining Neotribe, I myself was a founder CEO. So I've been through this journey. And in addition to starting my own technology company, prior to that, I was a salesperson and a software engineer. So I've actually been on both sides of the equation. And so, I will bring a perspective to the conversation, but we're really here to hear from our esteemed panelists. So I will let them introduce themselves. Kevin, why don't you introduce yourself?
Hey everyone, I'm Kevin. I'm the Chief Revenue Officer at Vercel. I guess a quick summary of my background in sales. I've spent nearly my entire career either selling open source software, selling infrastructure automation, or an amalgamation of those two. And I've nearly always been the first commercial hire or one of the first 3 to 5 commercial hires at, open source and developer like products. So hopefully I can share some insights today.
Excellent. Ben?
Hi, everybody. I'm Ben Sabrin. I currently lead the go-to-market organization for Okta's Advanced Server Access product, soon to be moving into privileged access management. Just like Kevin, I spent a good chunk of my career in open source and selling developer and infrastructure software. I was the first employee at a company called JBoss that was sold to Red Hat many years ago. And then I was the original VP of sales for MongoDB from when they were about 20 people till we were probably about 300. Several other startups, got to Okta through an acquisition of a startup that I helped build. And that's me.
Mark?
Yeah, I'm the old guy in the room. So I'm actually retired at this point, and I act as an advisor consultant for startups. During my career, I was able to take 4 companies public, and one of those, we actually acquired Kitu's company, Neotribe. He built just a great company, and we stole it for such a good price. So it was awesome.
Shut up, Mark. Don't rub it in. We ended up selling for $4 billion to Juniper.
They got 2 IPOs out of it, but we tried to make sure Kitu didn't make too much money.
I mean, Mark is should be on the Midas list because everything he's touched has turned to gold. What is it, Mark? NetScreen, Infoblox, Arista, and Rubrik, right?
Yeah, Rubrik and Network Peripherals back before most of you were even born. 1993, we took it public.
Wow. Amazing story. Amazing journey.
Awesome. Well, let's get started. We've lined up four questions that we hear most often from founders, and so we'll go through those, and then time permitting, we'll open up the Q&A and let attendees ask their questions of the panelists. So the first question, and probably I would argue the most important question for most founders that we hear is, man, how do I find my first 5 customers? We're just building the product now. It's 4 guys and a dog. How do I get those first 5 customers?
Kevin, why don't you start?
Oh, sure. Actually, this is one that we hear a lot, and kind of the joke we told earlier when we were prepping for this panel was you just kind of start selling it. You build the product once someone buys it. And we laughed at that, but it's actually relatively close to the truth in that a lot of times when we're going out and getting those first, 1, 3, 5, 10 customers, we're often going out and talking about, hey, I'm passionate about solving this problem. And if you put your money and faith in me, we'll solve that problem for you. And you'd be shocked at how much credit you get as like the founder for folks to say, oh my gosh, like, I want to buy into this person, even though I know that their product is going to have a lot of really sharp edges. I want to put some money and effort into these people. And so very often, like what we try and lean into is like sell that end state and say, hey, I'm really passionate about solving problems like this. And I think that the right way to solve them looks like this. And often you can get folks to nod along with you and commit to being either a design partner. And what you'll end up often doing is throwing a lot of engineering effort and maybe hand rolling a lot of things for that customer, but you're developing a lot of that muscle memory of like, okay, how do I solve this problem for this persona? That's typically, I think, and it sounds silly, but just going out and just trying and selling the thing and selling the solution that you're trying to drive after.
So I think there's a couple of approaches. I've been fortunate to be in situations in my career where we put products out there in open source and the market kind of came to us. But when you do that, you have to be solving a really big horizontal problem. And you also have to have a, call it a fairly mature open source product for people to start adopting. But you have to bring them to you, right? So while I say that they came to us, we drew them in, right? And so if you're taking an approach like that, when I say drawing them in, I'm talking about you've got to be incredibly vocal about what you're doing. You've got to be out there with the blog. We used to get on the road and just go speak at user groups. So I think just getting out in the community and evangelizing and finding people that resonate and gravitate towards the problem you're solving, and then dig in with those folks when they express interest. And like Kevin mentioned, I mean, start to qualify in terms of, if we solve this, what value do you associate with solving that problem? And if you make them feel a part of the design process, there's a good chance they're going to become a customer.
Yeah, I guess I look at it from a little different vantage point. I think Kevin's a lot smarter than me, and Ben too. So I look at it more of just the basics of, I invested in a company, and the founders came to me and said, hey, just introduce us to one CISO, just one CISO that we can get on a webinar. And if that goes well, then we won't even bother you anymore for other CISOs. And then they did, kept bothering me. And I think it's actually part of the process. It's probably a page out of Kitu's book that everyone in your company, everyone associated, investor, VC, should make an introduction. And if you're selling to large enterprise, that's really critical that they make those introductions. So I think you hold everybody accountable, and you just ask for one, and then you ask for one more, and you keep asking until they say, hey, I think I'm done. I can't help you anymore.
And then maybe to share a story from a prior company, what the founder did, and I won't name names, but at a prior firm, is he had just left. He had worked in, as folks will figure this out based on the story. He'd been a data scientist at a really, really, really large hedge fund, and was convicted that he wanted to go out and solve problems for that community. And I mean, as a good data scientist, he went through and like solved the problem as a scientist would, and went out and just interviewed, every single one of the folks he could get into contact with, and said, okay, like what are the biggest problems in your daily life? What are the biggest problems in your workflow? Categorize those, and then say, okay, and would go back and say, okay, if I solve this problem, how much would you pay for it? And in a very like analytical and incremental sense, went through and essentially said, okay, so you told me that if I solve this problem, you would pay this much for it. And that's exactly how he built his first product. Is he went through and then went back to those people and said, hey, I built the thing, will you buy it? And then incremented forward with all those people as pseudo design partners, and just, again, was just relentless in just like following up with those people. Like, hey, I've solved that problem. Will you pay for it? I've solved that problem. Will you pay for it? And it was a way he bootstrapped, I think, the first 15 or 20 customers for his company.
Yeah, I've seen that. That's the model that I took when I started my company, is a very similar approach. I think one of the things that people sometimes get hung up on is, those first 5 customers don't always need to be paying customers. There's all kinds of agreements, or, even just friendly agreements that they'll try to use it, and you'll give them a year or 6 months or 3 months for free until they get to a place where they're happy with it. But to your point, Kevin, at the end of the day, the hardest part is first getting in front of people, but then once you're in front of them, actually making the ask of, hey, if I build this, will you buy it? And if you will buy it, will you please be my guinea pig?
Yeah, I mean, look, I think Alex makes an amazing point. I mean, one of the most important things is you have to ask. You don't get anything you don't ask for, right? People are not just going to come give you things. So you absolutely have to be incredibly persistent, and ask them to lean in with you, and make sure that there's kind of a fair exchange of value. Actually, the way anytime I'm working on, especially early in the life cycle of a business, I always want to make sure that every customer that I sign early feels that they got the better deal from a value perspective than they gave to me, right? You always want to make sure there's some equity left so you can continue to grow that relationship. Because if they feel that there's equity left in that relationship, they're going to probably pay it forward, and they're going to talk to a lot of other people. They're going to be proud of the value that you and this product have delivered to their business. So another big thing is, like Alex said, they don't have to be paying you, right? Number one. Number two, the size of the deal has no bearing whatsoever. It's all about the logo and validating the problem statement that you're in the process of solving.
Yeah, those first 5 customers, not only is validation so important, but also it's you learning that your product works. Well, moving on, one of the other questions we get often as well is, hey, I'm just, I'm a former engineer. I've never sold before. I should hire a salesperson as my next hire. Or when should I hire that first salesperson, that sales leader? I'll put the question to you, Ben. When should a startup start to think through when to hire their first rep or sales leader?
Yeah, I mean, so first and foremost, I think a salesperson or a sales leader shouldn't be brought into the business unless they're part of the founding team super early, until you've proven that you know how to acquire a customer. Until you've proven that the market wants your product, not at scale, but there's several validations that the market wants your product. And the other important thing about that journey for you, the founders, to learn is to be successful in hiring a salesperson, a sales leader. You're going to have to transfer knowledge of what you learned during those early customer acquisition cycles, because nobody knows the problem that you're solving better than you, as well as the conversation of how you went from where the introduction came from, how the conversation started, and how it got to the end. You have to do it yourself first, right? And then the other thing I would say is, I think a lot of businesses now, they make the mistake of trying to hire a quote unquote sales leader too early. I think early on you need scrappy talent. I mean, look, I'll go back and look at myself. When I started at JBoss, I was 26 years old. I had never built a sales organization in my life. Mark Fleury will even tell people to this day, he finally took the meeting to get rid of me. And then we sat across the booth from each other at the Buckhead Diner, and we sketched out the original business model of JBoss. And I wouldn't take no for an answer. At the time, I mean, I had literally no responsibility. I was a single guy, and I took no salary, 3% of the company and 10% of everything that I brought in, and the outcome was pretty good, right? And so, you know, look for the person who has that hunger. At some point, you're going to need to bring in that leader to add structure, right? But structure shouldn't be added until you've solved repeatability, and then bring in a leader that knows how to scale that repeatability and build those muscles.
Well, Mark, I'd love to hear your perspective.
Yeah, riffing off what Ben said, I think that there's a big mistake of bringing in salespeople too early and not taking the responsibility, especially if you're co-founders. If there's two of you, then there's no excuse not to build a set of customers that help you understand exactly the dynamics that you're looking for. Because at one startup that I got brought in to just, you know, do like a one-day advisory session with them, and they were focused on the enterprise. They hired a sales rep, and then they figured out that they actually needed to sell to tiny small SMB companies. So they fired the sales rep. It cost them a bunch of money. The founder cost them a bunch of time, and time is so precious that I think the salespeople, I don't know if you're aware of this, because I got Kevin on the phone and Ben on the phone. We take a ton of time. We just use up massive amounts of your time. We want to talk everything out. I mean, look at Kevin. He's dying right now to talk. And so I agree with Ben. Take your time. Make sure that you've gotten some acceptance from at least a handful or a bunch of customers.
Kevin?
I'm always love to talk. No, I think Ben and Mark are exactly on the money. And I mean, this is I guess something that maybe many CEOs already know. You never stop selling, and so building that muscle early is great. Every CEO I've worked with, I drag them around the country with me, and we go on road shows together, and I roll them out and say, hey, Mr. and Mrs. Customer, please meet my CEO. They're the most important person. This is why you want to buy into our company. And so building that muscle early and being able to, in a really quick fashion, iterate on that value prop and the problem you're solving is so critical. And the last thing I'll add would be in terms of like choosing that person. I think the three things that I like recommend founders look for is like, one, like you should inherently trust this person. You're gonna give this person a bunch of equity. You're gonna invest a huge amount of time with them. You're gonna be flying around the country with them. You should inherently just feel like they're your person. You should like them for all the same reasons, because they're going to drag you around. They're going to be a representative of your company, of the product that you've spent the last N number of years working on. And the last one, and I think Ben was right on it, they should be hungry and just voraciously enthusiastic about either your space or your technology specifically, because they're going to get yelled at and told no for the next several years for your product. And they need to just be in love and on fire for the thing you're solving. And I think if you kind of find those three things, you'll tend to be pretty close for most reps.
So, you know, there's two major points you guys are making. And I think one of them, aligns with a conversation we often have with our founders at Neotribe, which is, you know, a startup goes through at least two phases, right? At the beginning of the company. The first one is where they're going through this wander through the desert to find proof of value, that the product that they're building is in fact going to be valuable to customers, and that customers will in fact not just pay for it, but actually deploy and integrate it. And then once you have that, then you can start to focus on proof of market, which is to say, you know, now we're going to go try and scale this thing out. But when you try and go to, you know, prove market by trying to scale it out before you've proven value, that's where startups get into really, really big trouble and run out of money. And so, you know, if I'm to marry that concept that we carry at our firm to what you guys are saying is, first you've got to get the proof of market driven by the founders, right? proof of value driven by the founders. Get those first 5 customers. Founders need to be the salespeople. And then once you know that your product is of significant value to your target customer base, and you figured out what the message is and what it took to get them over the line, that's when you bring in a salesperson to try and help you scale that effort.
And to one other point, when you talk about founders selling, right, one of the biggest focuses, depending on what stage you're at, let's say you've gotten 3 or 4 or 5, early customers, maybe 1 or 2 of them are referenceable, but you feel really good about the story. Try to get and do as many one-to-many type events as you possibly can, right? I actually think that more people should think about hiring a PR firm early than a sales firm, than a salesperson, right? If you've got a good message and it resonates, get that message out there either yourself or figure out somebody that can help get that message out there for you, and get on the road. I mean, granted, nobody can really get on the road these days. It's a little bit different. But speak at conferences, submit call for papers, right? Build that brand in the marketplace, where you can just get 100, 200, 1,000 people in the same place at the same time. Just magnifies the message.
Yeah, I think, and Kit2 didn't pay me any money for this, but I think another important component is when you choose your investors, and I'll talk from I advise a company right now, and we're talking with Kit2 and Alex. That's how I got connected for this webinar. I love people in the VC business that have done it, that have built companies the way, that Alex and Kit2 have built companies. The value they bring. Kit2 is one of the best salespeople I've met in my entire career. And I've had, I think, probably about 4, maybe somewhere around 4,000 salespeople work for me. And Kit2 is one of the very best. And to have him as an investor, and to have him to be able to call and say, hey, I did this, what do you think? Or can we go through this scenario? I think that's incredibly valuable to have a really strong operational investor.
Let's move on to the next question. So, one of the things that's become really popular right now in go-to-markets is this concept of product-led go-to-markets, where you're going to put your product on your website, make it easy for customers to download, either an open source project or sign up, through a SaaS app, and just be up and running on their own. And then at some point they'll swipe a credit card and become your customer. And in that model, one of the big questions entrepreneurs ask is, well, do I even need salespeople, and when? So I'll pose that question back to all 3 of you, because I know all 3 of you have experienced this to some degree. Who wants to go first?
I can at least talk about it through the lens of Vercel. Shameless plug. Vercel is a conference platform for front-end developers. It's really great. But what you need to understand about that is Vercel makes an open source product. We have a free tier. We have a self-serve product. And then we have an enterprise sales-led product. And the way we think about product growth at Vercel is it's very much a really, really, really long-term funnel, where the dollars I'm investing in Next.js at some point trigger dollars on my enterprise product. And it's really great now that we've run that thing at scale. But as a founder, I think the thing you need to be really thoughtful about of, can I do product-led growth, or do I need an enterprise team or a sales team? It's very much around, do you have very, very, very high confidence that a user can sit in front of your product and see a valuable use case within it and extract value from your product without talking to a salesperson? And if they can't do that, and you're like, oh, well, they need to watch our webinar, or whatever the thing is, your product's not mature enough to be a product-led driver. You can get there and you can bootstrap a lot of that work by having a salesperson or a DevRel or some marketing function kind of bubblegum over the immaturity of your product, but you really need to be convicted about that portion of like folks can see that use case and can see that value by talking to no one. And Ben, like over at Mongo, I mean, you guys are probably like one of the inventors of product-led growth with that. I mean, like, what are your thoughts?
Yeah, I mean, look, at JBoss too. So what's interesting is in both situations, we built some badass sales forces super early on, because the most powerful thing, let's say you have a product, whether it's a freemium product that people can easily try out themselves, an open source product. When you can assemble a team of amazing sales folks, provide them with the right strategy and message to go attack, to the enterprise buyer and the economic buyer. And then when that economic buyer groks that message, starts talking to the people within the organization, and they're like, oh yeah, sure, I know Mongo. Oh, look at this little app we've already built on it. Oh, great, right? Sure, I know this product. We've been playing with it. We've been playing with it for a while. I didn't know, can we use it in production? And you start to build this, what I call the accordion model, right? Where you're pushing from both sides. Bottom up is product led, and top down is really making sure that everybody is aligned on what some of the key drivers are within the product that you have, right? And I think that, look, for every Atlassian that's been incredibly successful without a sales force, there's thousands of companies that have reached their potential because they've built really good sales forces. And the other question is, I mean, look, don't get me wrong. I love nothing more. I tell folks in the organization right now, my favorite deals in the world are the ones that I have nothing to do with, right? But the reality is the market's been conditioned that they want a relationship with the buyer. If you're asking for a lot of money, right? I mean, if your product's cheap and it's easy and it's something that somebody can put on their credit card and put on an expense report that probably doesn't even need a receipt, then yeah, you probably don't want to be hiring salespeople. But if you're trying to extract real value, you should think about building a sales force.
Mark?
Yeah, Ben, I go back to your talk about how you did the interview and you were scrappy and you just wouldn't say no. I've only been in companies where we were selling to enterprise. It was either medium, large, or large enterprise. The companies I now consult with, in fact, one of them, I'm an advisor to Terra AI, is a competitor to Atlassian.
Oh, there you go.
They have no salespeople, and they have, I think right now, they're almost at 10,000 companies using their product and 30,000 users, no salespeople. And I agree with your thoughts exactly that it depends on the market you're going after. In the enterprise, I want to find that solutions-oriented person, that person that thinks in terms of and really cares about the customer. I interviewed a CRO candidate today for a healthcare company, and you could just feel that he cared about technology for healthcare and making a difference. And I think Kevin's shaking his head, so I guess, Kevin, you agree with that. That person that really cares about what the customer's saying instead of going on and on and on talking.
Yeah.
I think one of the things that I've seen is I think, people often underestimate how hard it is for an organization to buy something.
Yeah.
People can swipe a credit card for, $100 transaction, maybe even $1,000 transaction. But once you start getting beyond that, you start to leave the realm of a credit card pretty fast. And at that point, you start to run into multiple people within an organization needing to collaborate in order to make a purchase decision. And then the involvement of a finance and legal team to go get agreements in place and issue purchase orders. And, at a minimum, the navigation of a purchase cycle, in an organization for a 5-digit and above deal is really difficult without a salesperson. You know, you're putting the onus on the user at the organization to navigate that themselves. And that can be an enormous burden for your customer. And most customers, you know, don't have the time. And then the other thing I'll add to that is I think it's also, people underestimate how hard it is for organizations, particularly large organizations, to find new technology. Really good salespeople can kind of bring to the table is they're really good at knocking on doors and kind of screaming at the top of their lungs to get the right person to hear the right message at the right time. So Kevin, I think you were going to say something.
Oh, I was just gonna to add on to Mark's point. I think, and I think this is part of like the rise, like the CRO role, is that with product-led motions, that sales cycle is, I don't want to say never ending, but is a continuum from you have your marketing demand gen function, bringing people in, and sometimes that's just your raw product into your I guess what you'd call traditional sellers, but then you have your customer success team, and that's part of having that passion for the product, passion for solving that problem, because your sellers, at least especially our sellers at Vercel, 9 times out of 10, our customers come to us and say, we're using your product. We're almost in production. We're already in production. Help us buy the thing. And to your point, we help them navigate that process. But then my sales team and my customer success team's job is very much like user activation, recognition of value, and then literally just helping them go about and evangelize that thing of like, hey, you're really happy that you solved that problem for your business unit. Here's how to like convince those other folks to solve it for themselves. And where that's going wide and doing your big ELA. But the days of the like perpetual license, if we can convince them to sign, we never have to talk to them again, are dead. Mm-hmm. I now have to convince my customers to recommit to my company every 30 days. That's very stressful. But that's part of what the sales folks get to do, is they're very good at helping folks feel like they're extracting value out of your product every single month, every single year.
You know,
oh, go ahead, Mark.
I was going to say the comment that you made, Alex, is a really good one about navigating the sales process and having the experience to navigate the sales process. I think the founders on this call are going to prove everything that Ben, Kevin, and I said. You guys are going to prove it wrong. First of all, the exceptions are across the board. Even before the Atlassians, it was, you never could do it without a sales force, right? And then they did. So I think you all are going to prove us wrong. But I would say one other way to augment, if you say, I really want to have technical, like systems engineers, not salespeople, you can bring channels into play and talk to your customer, because one of the companies I advise, the big challenge they're having right now is they're landing big deals. I mean, Delta Airlines, United Airlines, Ford Motor Company, they're spending 3 to 4 months in the negotiation process and the red line process. And they've now uncovered channel partners who already have agreements where they could slide the product into that services agreement. So it's another avenue that can augment your initial sales team.
Wow, Mark, what an amazing point. I'm actually going to go off script here and ask you a question on this one. So how should a startup even consider channel partners at the early stage? Yeah.
I know Ben and Kevin will jump on this too. It's funny because I would say, that I have a phenomenal relationship with a bunch of channel partners, but I would say in general, you've got to go out and get those, 5 or 10 customers. If it's SMB, you've got to have a model that can operate. But now you've got the cloud, and my daughter runs the cloud management or the cloud partnerships for Aviatrix, for Mulaney's company. And the cloud is a whole new channel. And the economics of leveraging the cloud are unbelievable. But you do need somebody who understands how to get you in the marketplace, how to get through the process, or you'll be stuck in the churn for a long time. But if you get somebody who knows what they're doing, and I'll give you guys her number later, only kidding, then the cloud is such an unbelievable channel.
Yeah, I think that's an amazing point. I mean, the marketplaces that exist within the cloud providers today, are such a massive advantage. I mean, provided you know how to be seen because they're big, right?
And we were talking, and just to be clear, Ben, just for the audience, we're talking about things like the Amazon Web Services,
absolutely,
Marketplace,
like AWS Marketplace. I mean, there's a bunch of so there's the infrastructure as a service marketplaces, but there's a couple other
the App Exchange for Salesforce,
right? App Exchange. There's several marketplaces out there that can really lift products. I mean, and also to build on Mark's point, I mean, before you can really understand how to embrace a channel partner, well, most let's say resellers, they're not going to want to talk to you until they know they can sell a bunch of units or make a bunch of money, right? And if you don't have those stories and you start talking to them too soon, it's not going to solve any problem. But I think in Mark's case, like, they're walking in with, hey, we've got these big customers, you've got paper, let's make it work. That's a different set of scenarios. But you have to, just like hiring your first salesperson, you need to figure it out yourself. Losing control of the sales process too early before you really understand it could be really risky, because you're not going to get as much. So the thing is, when you're early on, you're in massive learning mode, right? I mean, everything, every customer engagement, every conversation, you're learning something new about your product. You're learning something new about how the market thinks about your product, how they perceive value from different features in your product, what they want to see in future versions of your product. And if you push that outside your four walls too soon, you're going to lose a lot of really good knowledge, right? That you need to inject back into the product development lifecycle and the company building.
And I'll
Yeah,
add.
I think that's.
Oh, good.
I was going to point to you, Kevin, because I think Kevin talked about this before. I mean, they're educating you on how to do the feature development, which features are more critical and stuff like that. So go ahead, Kevin.
Oh yeah, I was going to approach from, like, as someone who's run BD before and has a lot of scar tissue around it. The thing I'll recommend to founders is, if you are going a partner-led route, both be patient and be willing to, like, really heavily invest in that thing, and be thoughtful about what the successful outcome looks like for that channel motion. Whether it's, I'm looking to accelerate sales cycles, and so I want to go out and find OEM partners so I can take advantage of the pre-existing agreements that they have. Is it, do I want to build pipelines? I want to go find system integrators or agency partners that are going to bring me into deals? Or is it truly just revenue generation? So I'm looking for resellers where my product bundles into a larger solution, and I can go get Deloitte to go sell a $50 million deal where I'm $1 million line item and no one ever looks at it again. Be really thoughtful about which one of those models you're going after, and really invest in, and know that that's going to be an 18-month twitch for you. I see a lot of organizations start the BD motion really early because, like, oh, we got some inbound from a big system integrator, we're ready for partnerships. And they don't recognize in the same way the only that sales organization, there's an enormous number of folks that go into supporting that single AE. There's an enormous amount of, like, product engineering, product marketing, or partner marketing stuff that goes in behind that BD person to be successful. And so if it's free money, take it, but be thoughtful about what that means for your business.
It's almost never free money, Kevin.
Every once in a while.
I don't know with valuations where they are these days, it's kind of like free money, right?
So, all right. So last scripted question. How much should I charge for my product?
Alex, you got to start with your view. I want them to hear your view, because I love it, actually.
All right. Yeah. So, all right. So we had this discussion offline for the audience, and we had this really wonderful conversation about all of the theories behind it. And I just bomb in with my perspective, which is the number's 50K. Like, it doesn't matter what analysis you do and how you get there. It just ends up magically being 50K. It's kind of like the number pi showing up everywhere in nature. 50K just magically shows up as, you know, as the average selling price for any product that's sold to the enterprise.
And I want everyone on this call to know that Alex is, like, 100% correct.
He is.
Completely and entirely.
Yeah, sure, Alex. So explain why that's the case. Because I mean, when you said it, I actually have to say, after you said this to me 2 days ago, yesterday we were on a call with a startup that I advise. They had a bunch of deals that were 100K. They had a bunch of deals that were 50K, and then they had these 2 deals that were 40K. And I said to them, you know, that's not going to be important enough to the customer. You either got to get it to 50K or just don't even bother with those 2 accounts.
Yeah.
And it's so funny because that CRO 100% jumped on it, or the founder actually, not CRO, founder jumped on it and said, "You're absolutely right. Get rid of those 2 accounts."
Yeah, so there's really 2 parts to it. So the first one is, I think people don't realize that, organizations, look, most businesses are going to make money on larger customers. There are a number of startups that will make money on SMB, but even if you look at companies like Atlassian, a significant portion of their revenue is coming from very, very big accounts. And the problem is that people don't understand often that large organizations, they get really uncomfortable if your product's too cheap. They start to self-select out. They start to believe that you're not the right product for them. And I'll give you my own anecdote. We had Verizon as one of our early adopters, and they ultimately didn't pay us because they thought we were too cheap. Therefore, we weren't really the right product for them. And then we learned that lesson and went to another very large Fortune 500 and basically said we were 250K for the same product. And they signed because they felt that was the right number. And so, it's kind of like wine. If it's too cheap, you don't want to drink it. And enterprises, larger organizations that have the biggest budgets, kind of have a similar perspective where they kind of expect things to come in at a certain price. And when they don't, they start to ask really hard questions. The other reason that I always point to the 50K number is that it's really hard to make your go-to-market motion work. If you're making less than 50K ASP. I think people underestimate how hard it is for a salesperson to drive a deal. And whether it's a 10K deal or a 250K deal, the work often isn't materially different. And there's kind of a physics to how many deals a rep can do a year. And so, again, this is all rule of thumb, but if the deal size is under 50K, it's hard for that rep to deliver enough gross margin to make the model work.
And maybe for the founders, put some tangible numbers around it. When you hire your sales team, the rule of thumb for how much do they cost for me, it's gonna be 5x what we call their on-track earnings, meaning if they sell 100% of what their target is, they should essentially be doing 5x what that is. So if I'm gonna pay a rep $100,000, I'm expecting them to bring in roughly $500,000 to my business. And so you say, okay, they got to make that means $500,000 worth of sales. They're going to close probably 20% of the deals that come across their desk, roughly, again, benchmark roughly speaking. And then you say, okay, an incredibly organized, really, really, really talented rep can probably manage between 5 on the low end and maybe 100 deals at a given time. If they're really, really organized, they have all these, they really adhere to their good CRM management. And so you can start to look at that and squint it and say, okay, for that rep to hit that number, they got to be selling, a lot of deals if I'm selling a 10K ACV. And so you can start to look at the mechanics and physics of your business and say, oh gosh, it just doesn't pencil out. And so if you can't charge $50,000 for your product, or again, do a little bit of math, you should either say, I need to go be product led and then find a way that there's a 150% net revenue retention motion where I land at 12K, but then there's some cross-sell upsell motion, or B, you need to go back and work on that product because it's not solving a meaningful problem. And I think that's kind of the other ugly truth about pricing is if you can't get people to pay real money for your thing, you're probably either not explaining the value well, or you're not solving a real problem.
Yeah, you haven't truly found the pain that an organization has, and if they can't associate your product with solving some pain, they're probably not going to do anything. There's a whole other side to this equation as well. So for a large enterprise to buy something from a new vendor, there's a lot of work that goes in on the buying side. And if your product's too cheap, you're quickly going to get thrown into, it doesn't make sense for us to onboard a new vendor, right? Because onboarding a new vendor is paperwork,
Yep.
it's legal fees. So next thing, am I going to burn 40 hours of one of my lawyers to get an MSA in place with this small company for a product that costs $25,000, $30,000? The answer is probably no, right? And so, that's the other side that you really need to be mindful of when you're selling to the enterprise. And you can have this mindset that like our MSA is our MSA, and that just doesn't work. If you want to sell your product to big companies, you're going to probably, bend to a good chunk of their terms because they have all the leverage because you want their money. So another thing to think about.
Yeah, Ben, there's an interesting anecdote that we always live by, which was, and if you don't have out of the initial group of customers that you approached, and they understand the value and it solves pain and it gives them a personal win, if some of them, or at least a couple of them, don't say your product's too expensive, it's too cheap.
Yep, totally.
And
yeah,
to follow on to Mark's point, like this is literally what we did at Trade.io. It's been long enough. They've actually they have real pricing now, but I was one of the first few sellers there. And essentially what we did is we went and said, okay, this is what we think the best of breed of our competitors is charging. And we're going to ask for a little bit more than that and just keep asking for it. And this is actually advice I'd gotten from Alex was, we say, hey, it's $100,000. They say, absolutely not. They fall out of their chair and they're angry at me. And I say, well, what would you pay? And they say, $60,000. We say, it's $60,000. And that's our pricing at the next, iteration. And it was great advice to Alex. He'd be like, hey, that's a good way to almost smoke test. What is a reasonable amount that we could charge for this thing? What is someone willing to pay? And I think the last thing I'll add is don't be ashamed about asking for more at renewal. Don't be ashamed about asking for more at that next iteration. Like, hey, we've added 1,000 amazing features. You're getting all this wonderful value. We got you for $36K to start, but let's have a conversation about moving you to that next level or the next tier. It's totally okay. Like you can ask and have that uncomfortable conversation. And buyers, if they love your product, will typically say, yeah, I understand. I've been hoodwinking you for the last 12 months. I'm excited to pay you what you're worth. They don't actually say that exactly.
Yeah.
You read between the lines.
So I'll give you some real world anecdotes that happened on both sides of the equation. So in the very early days, like our first business model at JBoss is, our product was free and we were just selling support. And most of the core developers, this is before. So for those that don't know, that are too young, JBoss was one of the first open source companies, right? We really invented the professional open source model. And we built the product with developers that didn't work for the company initially. And we eventually hired them because we didn't have somebody funding the company for us to go out and hire all these engineers. And so we would sell a support contract for $10K that gave somebody 50 hours. And this was the model they built before I joined. And then we eventually refined it. And, if the customer didn't use it, they would lose it. Well, when I got there, one of the first deals that I started processing and getting done, we sent them the agreement for 10K. And what I got back from them looked like a roadmap with so many red lines, right? And so I actually picked up the phone and I called the customer and I'm like, look, here's the deal. You need to tell your lawyer to try again. They're like, what do you mean? I'm like, I don't have a lawyer on staff. It's going to cost me more than 10 grand to get to clean paper on this deal. So we just can't do it. So they need to either realize that we can't do this transaction that way. And sure enough, they did, right? Because they wanted our help because they needed our product. But another scenario was GE had been knocking on our door in the really early days. And this is when, Jack Welch was still running GE and they were Fortune 5 and flying incredibly high. And, every technology company, software company wanted the GE logo on your logo page, right? And we tried to eventually go back to them, like one smaller division in the GE Power Systems out of Atlanta. and we gave them like a 40K proposal. This is, completely validates Alex's point. And they like didn't take us seriously until finally we sent corporate. It was like a $500,000 proposal. And all of a sudden they invited us to Fairfield. We're literally sitting, they sponsored a meeting to all the divisional CIOs. And they're like, okay, we can take you seriously because there's no way you can build a business by getting $40,000 from GE. Right. And then of course they eventually wanted a better deal because that's what they do. But I figured I would just tell a couple stories.
Yeah, so if I can leave entrepreneurs with one philosophy on this point, is in addition to the price being 50K, it's if your product's really valuable, if you really are delivering breakthrough value, you should be able to ask for an extortionary price. You might not get it, but you should have earned the right to ask for it and then get negotiated down, as opposed to walking in with what you think is an entry point price that you think is going to, that the customer is going to see as a no-brainer. The entry point price might be sending the customer the opposite signal that you want to be sending. So with that, guys, those are all of the questions that we had scripted. I'd love, if time permitting, I'd love to turn it over to Q&A. Kristen?
Yep, good. Okay, here we go. First question is, thoughts on building a sales org top down, VP first or bottom up, AEs first?
I mean, I can start if you'd like. I think it depends where you are. I personally am a big believer in, as early as you possibly can, building a culture where you're allowing people to grow and promoting from within. So I would try to hire an individual contributor to start, because if you're the VP of sales or the chief revenue officer, for a company that has less than, call it 20 people, guess what? You're selling. You have a big title, but you're rolling your sleeves up and selling. And so I would just I would try to hire an individual contributor who you deem is capable of, let's say, building that initial team, right? So they've got the brain power and the aptitude, and you could see the trajectory where they can eventually build a 4, 5, 6, 7 person team and get you to repeatability. That's because a lot of times, I mean, look, if you were to try to hire me right now, the first thing I'm going to want to do is I'm going to want to hire other people, right? So don't hire a VP unless you're ready to build a team right away, because that's what's going to happen.
I think Ben's right on the money, because a lot of times as well, there are different types of VPs of sales. And if you hire that first VP, and I think Mark told that exact anecdote, you hire a VP who is phenomenal at selling to Fortune 50 companies, and you find out you have a bottoms up motion selling to mid-market SMBs, guess what? You've wasted $1 million in 12 months. And also you've hired a bunch of sales reps who are built around the wrong go-to-market model. Versus if you risk that and hire maybe a rising director of sales, someone who's maybe got 4, 5, 6 years of closing experience, and you can gild them with that director title and say, hey, we're going to run together for a while, and maybe hire 2 folks. Then you can go out, figure out, sell your first, couple of $1 million of ARR, and then know, hey, this is exactly the type of team I want to build. And then either promote if that person can run, or B, you bring in a VP who's targeted around the type of go-to-market motion that you think is best for your business.
Mark, I'd love to get your thoughts on this.
Yeah, I wish I could add to what Ben and Kevin said, because I think they nailed it. I think there's always the exception, right? But if you're thinking that you're smarter than the experience of all the people that I know, and that's a lot. That's almost 95 years now that I've lived. So it's funny. I mean, there will be the exception where you could hire that VP of sales, that CRO. Maybe you have unlimited funds. You already know the product because it's just a complete replacement product. It's just better, like Terra is to Jira. then maybe that you could do that. But man, the risk profile of that is unbelievable. I mean, getting the right person and nailing the market and nailing the feature, it's just such a, but I agree with exactly the comment of the best models I've seen are where you take an individual contributor who has some experience in management, but they want to build it themselves, and they're willing to hit the streets. You just got to be careful that all of those managers say that they're willing to do it. And I would say 80% of them are smoking some really good stuff because they're not really willing to do it.
So basically all you guys are suggesting a player coach, right, Mark?
Yep.
Yeah.
Yep. I mean, I love the person that said, and you say, you extend the time frame. I just had this conversation with a company yesterday. You don't tell them, hey, we'll probably hire a team in 3 to 6 months. No, you tell them it's going to be probably 18 months before we hire a team. So they don't come in assuming that they're going to be Ben. I mean, you don't become Ben by all of a sudden just showing up 26 years old, where he is now and where he was at 26. You want that. I want that 26-year-old first.
And honestly, like, I don't know that I can go back. And trust me, I mean, I've built a really good skill set in taking a bunch of companies from zero to something. And, I question when people call me to talk all the time, like, is that something that I want to roll my sleeves up and do again at this point in my life? It's fun, right? But you have to make sure that the person is ready to do the work, because it's hard, right? A lot of times, there's no book. There's past experiences. You can have mentors like Mark and others, right? You can get advice. But that early, call it 0 to 10 million, there's a whole lot of art. And there's a whole lot of getting punched in the face, right? And you better be ready to roll with the punches in order
and like you, Ben, you better be ready to work this is your life. You're making a massive sacrifice. You're putting everything on hold. I remember eating Taco Bell in my bedroom of my apartment because I couldn't pay the rent. And so I didn't want to turn on the lights in the front of the apartment because then the landlord would know I was home.
That's awesome.
Amazing.
That's why I weigh like 120 pounds at 6'5", Too much Taco Bell.
Awesome. Kristen,
next question. Okay, here we go. How would you balance keeping a difficult, in quotes, customer early on to learn more versus giving up on them in an attempt to optimize for more efficient revenue attainment?
Hey, man, I'll take a crack at this one first, though, because I still have scars from my first customer. My first customer was an absolute maniac, and was paying us. I mean, such a low amount is embarrassing to say on this call, but I'll tell you, it depends on the stage of the business. This person would call me directly on my cell phone at least like every other day to go basically complain about the product. And at the early stage, that person was a blessing, because we really got to figure out where we needed to polish the product up. But there does come a point when you've hit proof of value, where you know what you need to have and that you have something good enough. And I think once you tip into that, you're ready to scale, then you can start to then that maniac customer becomes a prime candidate for firing. So my 2 cents.
And this will probably be sacrilege to all the sales folks on the call. There's absolutely a time when you say no to Apple, or you say no to Walmart, you say no to Target, where they start to, because they are the biggest organizations in the world, start to ask you to overfit your product to their specific needs. And when your product leader or CEO come to you and say, hey, I'm eviscerating our roadmap to serve this customer, is it worth it? 9 times out of 10, it's not. And that's normally for me the tipping point where I say, we need to go have that that frank, critical conversation with that customer and say, we can serve you in this box, but we can't serve you over here. And it's totally okay to fire that customer. And sometimes board members will get upset, and sometimes sales reps will burn you in effigy, but sometimes it's an important, critical decision to make of the area under the curve is much more important.
So fun fact, my very first board meeting ever, after I'd raised capital, I walk in and I told them that I had just fired my marquee customer, Boeing.
Tell us, how did that go?
Well, this is the mark of good venture capitalists. They didn't bat an eyelash and we didn't miss a beat. Because to your point, Kevin, the reason we fired them was they wanted us to go to the right and the market was pulling us to the left. And we were like, look, we're not their professional services organization. We're building this product and they're either buying it or they're the wrong customer. And so we were very, very lucky. We had fantastic VCs, and so we were fine, but it's a very, very scary moment.
Yeah.
Yeah, look, I think, it goes, I go back to, yes, there's a point where you want to tell the wrong customer. And I think it's to Kevin and Alex's point, you can't build for a single customer, right? I mean, unless they're asking you to do things that are broadly applicable, it's a dangerous place. If you want to go do that, you should be a consulting company solving problems for a customer at a time versus building a product that is out for the masses. But early on, it's all about learning, right? And so, while you may feel that they're difficult, as long as they're, not unreasonable and you feel as if you're learning and you have that growth mindset of, okay, yes, maybe the interaction is challenging or their experience isn't great, whatever it is, try to learn something. And the other thing that's critical to, and Kevin mentioned this earlier, we don't sell perpetual software anymore, right? We sell subscriptions, right? In some cases, there may be some, even like the hardware business is getting into, subscriptions in some ways, right? And so with that said, every year you're up for renewal, you're up for re-election. And so building that customer obsession muscle early, when you have difficult customers and you're having difficult conversations, is going to be a really good muscle to have in the company, right? So don't be too quick to fire just because the experience isn't great, or you think they're pushing you too hard, or you think their expectations are too high, unless they're taking you off of your path, right? Is what I would say.
And the last thing I'll add is sometimes no, and actually this is just broadly applicable to selling in general, no is this incredibly powerful word. And that customer may just keep hammering at him. You just say, no, we can't do that. And suddenly it's a different conversation. I, as a default people pleaser, it's hard for me to say no. And it's a muscle I've had to build. And saying no to customers and saying no to prospects works phenomenally well. And sometimes a difficult customer just maybe needs to hear that.
Yeah.
Okay, I think we semi-addressed this, but I just want to fully toss it out there to make sure we get the full answer. Product market fit has a wide range of definitions, including very romantic definitions like when you feel it when you have it. What is the definition of product market fit for you, and how can founders feel when they have it in the numbers?
I answer this question often on a one-on-one basis. And so let's talk about the romantic answer first, because I actually do feel it's true, right? It is like love, right? If you've never been in love before, you can read all about it, but it's really hard to know if you've got it. But when you've actually fallen in love before, you know what love is. And product market fit's kind of the same way. So I'll preface my answer by saying it's hard to describe, but it feels like this. When all of a sudden you show people, the right people, you've identified who to show it to, and you consistently get the same result. And the result is, this is awesome. I'd love to move forward, right? When you start feeling that tug where it just suddenly feels like people are pulling it out of your hands as opposed to you pushing it into theirs, that's what it feels like. Now there's some mechanical metrics to prove that you've got it, but contribution margin and your ability to add a rep that is productive by a certain pace, and all of that stuff I think is a big trailing indicator. But I think the leading indicator is when you actually start to feel on customer calls people tugging this thing out of your hands, and in some cases asking to pay you. That's my opinion.
Yeah, it's interesting. On the chat, if you look at the chat, and I'm going to destroy your name, Arjit Sarkar. So I loved his response. If you have a sales team, I think his response is fantastic. One of the companies that I advise has a sales force of probably 40, 50 sales reps, but they have about 10 of them that went 0 for the quarter. And I said, you still haven't figured out product market fit. You beat your number, but don't get comfortable because you have not figured out product market fit. For those who subscribe to MedPick or Medic or the concept of building a champion, the champion that you're selling to needs to either believe that if he doesn't implement your solution, he potentially could lose his job, he could get fired, or that if he does implement your solution, he could be a hero in some way, and there's a personal win in it for him in his career or him personally, because it's going to be such an important thing. And when I look at most people telling me about their securities, I spend a lot of time in security solutions. I got to be honest, most of the time when they give me we give them visibility. And my favorite is whenever they mention SolarWinds, I want to puke because there's about 2,000 security companies saying, have you heard of the SolarWinds breach? And any CISO hasn't heard of the SolarWinds breach has been living in a cave in Antarctica. But it's like, to me, when they show me their product market fit, I'm like, so what? You give them visibility, and so did my firewalls in 2001.
Right.
I'm sorry, that's not compelling. And they say, oh, and we give them more of this, and I'm like, so what? And I think people have got to be a lot tougher, especially early stage companies where many of you are, be a lot tougher on, is our value proposition really compelling? Is somebody going to lose their job if they don't implement our solution or a competitor's solution? And then it's, how do I differentiate?
Yeah, actually in the chat, Sriram, one of our advisors, made just like one of the most classic points of knowing when you have product market fit, which is, you do a proof of concept, and at the end, you turn it off. And if the customer doesn't absolutely lose their mind when you turned it off, that's probably not a good sign that you've got product market fit. But if they're like, no, you can't turn this thing off, where do we sign? Yeah. That's a strong indication.
Yeah, I love the answer that Mark pointed out too. I mean, if your average rep can hit their number, you absolutely have product market fit for sure, right?
There's a good paper on this topic, Mark and Ben, that a guy named one of my professors, Mark Leslie, wrote called the Sales Learning Curve, where. Yep.
And Mark Leslie knows a thing or two about building companies too.
Yes, he does.
And so if anybody Googles, the sales learning curve, I think it's an HBS paper. He actually breaks down some of the math on kind of how to figure this stuff out once you have a sales team.
Yeah.
Yep.
Kristen.
Ready for the next? Lost my mouse. Here we go. Okay. SDRs, how to size, when to add.
Oh boy.
Kevin.
Oh no, I'm the worst person. I am a really big fan of automation, and the first hire that I made at Vercel was a gentleman I worked with before at Neo4j, because his consistent promise to me was, I can build it with software better than you can do it with SDRs. And I think, again, a lot of times based on my experience, I've always been in very high volume, low signal markets where my problem is more often than not, who do I talk to out of the thousands of people raising their hands, rather than going out and saying, here's my top 50 list, and these are the accounts I need to go talk to. And so I'd love to hear Mark's thoughts to take the product-led growth or the open source side. I tend to say, try to solve it with a really great demand gen and automation person first, and then have that next level be, an SDR. But I'm really reluctant to bring them in and actually I typically like to have my sales reps do most of that work in the early stages of selling until I get to some level of efficiency where I know that my reps, I'm giving up deals by having them do the screening and prospecting and response.
I'm personally violently opposed to hiring an SDR early.
Me too.
They like they're almost always super junior, and you don't have the bandwidth to train them. And then two, that's work your sales reps should be doing. And any rep who doesn't want to go do his own outbound is a rep you should not have in your organization early on.
I think it's one of the biggest systemic problems that exists within our sales organizations today. And I'll blame the multiples that, the public companies are getting for, and they're being given a pass for the cost of sales numbers that they're showing up with, that we have these layered things. That said, I think the time to think about adding them is when you get to a point where your pipe gen number is formulaic down to what your expected revenue and bookings target is going to be for a given period of time. And I will say that when you're a small startup in the 0 to call it probably even 20 million, that is almost never the case, right? That you have your pipe gen number to a formulaic point where you know that in order to hit a $300 million number or a $100 million number, that you need X amount of pipe, and you know exactly where those stages are, and it's become an equation. And when you have that, then you need to be feeding that pipe any way you can, and you can then justify the dollars associated with the SDR. But like to Kevin's point, I think there's so much really good technology right now that, if all an SDR is doing is running a sales loft or an outreach sequence or cadence or whatever they're called across the various platforms, well, why isn't just a single demand gen person running that against a really good database? And at the end of the day, like, why do we pay salespeople a lot of money? We pay you a lot of money to go hunt and go find customers. And I think that we have enabled people to become a little lazy and not build their own pipe because we're feeding them, a ton of qualified pipe. So that's my take.
Mark?
Yeah, there's a play. I agree 1000%. There's a place for those people that need an inside sales rep, and then they need a customer success manager, and they need all these things. It's called a large company, and those are the ones, as soon as we got acquired, that I left, because I wasn't interested in that, that easy lifestyle company. And I doubt many of you are lifestyle people. That's not why you do startups. Otherwise, you just stay at Intel or stay at, a big, Cisco or whatever. But I think the other one that just drives me nuts, Ben, and I don't know if you agree, is hiring channel reps. You own the whole territory. You own every aspect of sales. You own finding the customers. You own closing the customers. You own keeping the customers happy and understanding what their needs are and having those conversations. And you own using channel partners appropriately if you need them, except maybe with the exception of cloud marketplace, with the Azures and the AWS, because that is something where you need to have the mechanisms in place.
Yeah, I agree with that. I think use all of your resources to their disposal, right? If I'm a rep, we used to, the way that I've done this a bunch in the past is, look, here's your piece of dirt. Your job, you're the developer of that dirt. It's your business. Grow it. And that means you're going to build demand for that dirt. So like even back in the day, we built one of the first, call it hybrid, inside out sales machines at JBoss. Everybody at the time who worked for us was in our Atlanta office. The rule of thumb was 3 weeks in the office, 1 week in your dirt. And when you were in your territory, I wasn't going to sign your expense report unless you had at least 3 in-person meetings a day and you were doing 1 to 2 community building events while you were in territory, right? And that could be meeting with a channel partner and doing some event with that. It could be going to a user group, doing an event with a customer, whatever it may be. But it was your dirt and you owned it and it was your business to build.
So Ben, I don't think you could have queued up the next Q&A question any better. Kristen, you want to tee it up?
Sure. How should startups get creative on go-to-market in a post-pandemic world?
Ooh. Yeah. Well, Zoom's a really big customer of mine, so I'll say keep using Zoom. No, I'll let somebody else start if you want.
I think hire with the, if it's enterprise.
Guys, if it would help to provide a clarification, I asked a question, and the motivation behind the question was, a lot of B2B businesses today, all outside reps have, for all practical purposes, been reduced to inside sales reps. And so should startups get creative and drive more from the inside rather than just do the, more traditional, feet on the street kind of model? That was the motivation behind it.
No, that's good. That's good clarification. Mark, do you want to start?
I'm not sure I have a great answer other than, the first sales people you hire should have a Rolodex of customers they've sold to, so that they get the initial wins. And then I think there's so many virtual happy hours, virtual everything like that. But I think it's starting to open up. For one thing, it's starting to open up. So I think maybe we won't be in that situation that much longer. So I don't know. Go ahead.
And I could share maybe an interesting correlation is we didn't notice ACV drop when our field reps stopped moving around in the field. And so often, a lot of times, we as sales leaders will think about my enterprise rep spending time, shoulder to shoulder with a customer, running that POC. They're going to drive additional deal size and value or de-risk my deal in some capacity. And what we found is that, and again, this is in the COVID world, because my customers are primarily still doing their work digitally, we actually found that the barrier to doing a lot of those, I'm trying to think of the right term for it, a lot of those relationship building exercises actually dropped. And so when we went out and started talking again, we have a large open source community, started reaching out to them, hey, can we go do a lunch and learn virtually with your team? Hey, can we do all the activities that we would have normally spent 3 weeks coordinating with our field marketing team to get all the right folks in the room? We're able to bang those out really, really quickly. And so we've almost turned it into a volume game where, because we can do 3 lunch and learns in a day with customers in several different geographies, that we're actually finding that a lot, it has not been as detrimental to our field motion as we expected. And I don't know what 2021 is going to look like. I don't know what 2022 is going to look like, but it has been less, shockingly, it has not been the most stressful part of 2020.
Yeah. I think too, this is a great question. I think if you're focused on the enterprise, the FaceTime and relationships are never going to go away. Right. I will say, there's going to be some,
particularly the larger enterprise, right?
Yeah. And the larger enterprise and the amount of value that's being exchanged. Right. I think that always dictates how often somebody may want to see you. But, personally, I got one of the larger deals. My team got one of the larger deals done that I've ever done in my career this past year without meeting anybody face to face. which was pretty cool. Look, I do think there is going to be some pull, and it may be, we tend to be a society of extremes, right? We're not very good at moderation. I think one of the most addicting drugs that there is going to be is when you remove the T&E line for public software companies.
Right. The audience, when you say T&E, can you elaborate?
Sure. Travel and
entertainment.
Travel and entertainment, right? So those meals and those plane tickets and those hotel rooms, that all the people that have been traveling haven't been traveling. You're not getting those expense reports, and your top line is growing at the same rate that it was. You're going to start to see a good deal of pushback into resuming the normal for a chunk of businesses, right?
Mm-hmm.
Like I could go back to, if you're selling to very large enterprises and they're not existing customers, like I think in our business, it's definitely been harder to land net new logos during the course of the pandemic, but cross-selling new products and upselling to your existing base has been, flawless. So that would be I think some companies may over rotate, and it may, they'll move back to the way things were as soon as they see their growth go in a direction that they don't want it to.
To maybe double click on that, Ben, do you see that it's going to be a competitive advantage for the field?
So you broke up a little bit.
Essentially, do you think that when it's a coin flip deal, do you think we're going to start to watch the pendulum swing toward the field teams that are showing up for customers that are doing the in-person lunch from the dinners, even though we know that's a little bit silly, but it means something when I'm choosing my vendor?
Look, it matters. I mean, I had somebody early in my career, I'll never forget, we were interviewing for our second and third rep many years ago. And if you looked at the two candidates on paper, you clearly would have hired one of the two. And so we get through the interview process, and Bob, who was an advisor to ours at the time, he's like, look, this guy definitely is not the guy we should hire on paper, but I like him. And I like to buy stuff from people I like, right? And that matters, right? And, it's people I like, people I trust. And that goes back to talking about trying to do new logo acquisition in the pandemic has been somewhat challenging, I think, for a lot of businesses. That's the beauty of the SaaS model, is it kind of, revenue growth that you're growing through the course of last year. Well, that was done a year ago, right? So all the growth that we've seen from a lot of the SaaS providers, well, that was baked in 2019, beginning part of 2020. Time will tell what next year's growth looks like when we really understand, right, the impact of the pandemic on revenue growth and customer acquisition.
Well, guys, with that, I'd like to thank our panelists for attending and giving us such great insight. And thank you all for joining us for tonight's panel. If anybody has any other questions, feel free to tweet us or hit us on LinkedIn. But hopefully this was valuable to everybody.